Good afternoon. This is Alan Heffling from Comstock Investments, head broker here. This is one of the first seminars that I've done. We're going to go over the March USDA crop supply and demand report. I'm going to give you some slides here, and we're going to go through some of these. Let's see, you got to do that. Share it with you. And now you see a picture of the USDA ending stocks. So it was released this morning at 11:30. As you can see, the corn number in February was 2,320 or 2.32 billion bushels. They kept it the same, 2.32 billion bushels. I'll go over the specifics in a later slide for you. Here was a number here on the beans ending stocks. USDA in February was at 4.2 or 420 million bushels. They actually surprised the trade by coming out with a 435 million bushel carryover. So they increased the carryover 15 million. And you can see the average trade guess was at 418. So that was a little bit of a surprise in the soybean carryover for this coming year. The wheat number, they lowered it somewhat from the February supply and demand report. And that was somewhat a little bit friendly, but I'll go back in later slides and show you why the market didn't have that big of a reaction to that. Now on the world grain and oilseed stocks, you can see in the February they were at 248.6 million bushels, metric ton, I should say. It came in the March at 2.49.9. So they actually increased wheat world ending stocks by a little over a million metric ton. Coarse grain, the average February they were at 250.7, came in at 255, and that's probably increases from the Brazilian crop, South American crop, in the corn especially. You can see that in February they had the corn world carryover at 2.176 million metric ton. We came in a little bit, about 3 million metric ton more. Soybeans, it came in at 2.4 million metric ton more. And in later slides, I'll show you where them numbers came from. So now the next slide here is a South American production. You can see in February, we're at 104 million metric ton. And this was a surprise to the trade. Average trade guess was at 106, but USDA actually came out with 1.8 or 108 million metric ton, which was a little bit of a surprise. It always takes the USDA a little bit longer. They're a little more conservative on their numbers, but they were more generous on their numbers coming out of Brazil. Argentina, they increased just a little bit from the February, or kept it the same as the February report. Some people thought they might increase it, but if you remember, Argentina had a little bit of problems early on in the growing season with too much rain. They lost some acres, they lost some yield, but the good part of Argentina made up for what they lost, and they kept keeping it the same. We're still looking for increases to come, get bigger as the growing season goes finishes out down there. The Brazilian corn crop, you can see they increased a pretty good chunk from the February estimate. Again, surprised the trade a little bit. USDA was more aggressive on that. And you can see, and that's one of the reasons why corn closed down 5 to 6 cents today. Argentine corn, the corn crop didn't have near the problem early on as the bean crop did, so they actually increased it some from their February estimates. So, okay, now we're going to break it down into the supply and demand type deals. So, starting out, obviously, production stayed the same from last year. We brought in 1.737 beginning stocks. We had a production of that. Pretty well self-explanatory here. Now here's where it's kind of interesting here. The feed and residue column, they actually took 50 million bushels away from that column. I don't know if it's coming out of feed or if it's coming out of residual, but I can't hardly believe it's coming out of feed with all the increase in numbers of livestock. So that could change down the road. And then they actually increased ethanol usage 50 million bushels. And that's why they came out with the same carryover, the 2.32 billion bushels versus last month. They kept the average price, farm gate the same. So not really any big surprises, but it's interesting that they took 50 million bushels away from the residue. They kept exports the same. This could change going down the road some. USDA is pretty aggressive of what they got predicted for the rest of the year. With the Brazilian crop and the Argentina crop being as big as it is, we may have a problem exporting this number that they have here. So there could be some changes here too. Okay, it'll go into the soybeans. Next slide. This is the soybeans. Everything stayed the same with harvested acres, yield, beginning stock stayed the same, production stayed the same. Crushing. Now this was a kind of a surprise in the trade here. They actually crushed 10 million bushels more soybeans for the crush part of it. And you'll see that on the next couple slides, what that did to them carryovers. But this was a kind of a surprise here. They took 25 million bushels away from export numbers. This is a surprise from the trade. The trade was actually looking probably for a little bit of increase of exports, and the USDA said, no, we don't agree with that. This is what the number is. So you take the 10 million plus and the 25 is net 15 million for total use. So that puts it on the bottom end. So we're actually going to have 15 million more bushels of soybeans at the end of the year. So we're dealing with 435 million bushels. However, USDA actually upped the farm gate price. So we'll see how that all plays out. All right, the soy oil. If you remember, they crushed 10 million more bushels of soybeans. That means we got more production of oil by 170 million pounds. They actually brought in more imports to the country, 25 million. So we have a total supply of oil, 195 million more pounds to deal with oil. However, they did export a few more. So the net gain on the oil ending stocks was 95 million pounds. And that was a little bit of a surprise to the trade. Obviously, you can see that they're going to lower the average farm gate for the oil. All right, next slide, I think, is the meal. Okay, if you remember, we crushed 10 million more bushels of soybeans, so that makes more meal, like 200 short tons of meal, and we're not going to use any more the way it looks. That's what they kept their numbers. And obviously, we got 200,000 more short tons of meal to deal with. But however, USDA kept the farm gate price the same. So, all right, here's the wheat. I remember the wheat end of year comes, I believe, June 30th. Beginning stocks, they kept all the beginning stocks, the production the same from last year. Imports, they actually took away 10 million bushels of imports. So that gives us a little bit less supply. And you can see that the total number down here, ending stocks fell by 10 million bushels. Farm gate price stays the same. So no big surprise in the wheat numbers. Probably if you would say a little bit of surprise is the imports. doing that. So, all right, next slide. And I'm going to go into some charts, just kind of show you what happened with today's trading. This is a soybean weekly chart. You can see for the week we're down probably about 20 cents now for the week. You can see we're right down at the bottom of the range again. So we really didn't do any major chart damage in the November beans. We actually held some of the last low. So we're still in the trading range that we've been in for the last couple months. However, we did close below one of the sharp uptrend lines here, this blue line here that I'm showing you. We did close below that tonight, which is somewhat, excuse me, somewhat a little negative. But the funds are coming in here late today, and they bought the beans at the close here. So we had a decent close. November was only 5 cents lower. So, so the charts don't look too bad, but the funds are going to have to come in here and defend their positions. So I just wanted to show you a short-term chart here of what I see daily. And like I said, we're not breaking the bean market yet, but we're bending it. So we'll see what happens. Okay, now this, you can see there's a few more lines here. And this was our fall low. Our fall low was in September, 858. Actually, that was our low that we put in a year ago last summer. And then the high that we put in January. And these lines here are just retracement levels, just kind of show you where support is. If we happen to break below our January low here, next support should come in here around this 980 to 972 area. And then if all hell breaks out, we could see a low of 930. But I think the funds are in here going to defend their positions at least until we get through the planting season. Excuse me. All right, next chart here, December corn. December corn I didn't like the way it closed today. We went through a short-term trend line, as you can see here. It had the lowest close since about the middle of January. So we actually did a little bit of chart damage on the corn. And I think the reason why was, if you remember going back to the world carryover where Brazil and Argentina corn crop is coming on with gangbuster yields and production. And I think that's why we saw corn have a little worse day percentage-wise than soybeans. Now, the longer-term trend line, we are sitting down here a little ways. Looks like around 383, 384 area. Or no, excuse me, 385 to 386 area in December corn. That should hold it, hopefully. But short term, we'll probably have a little pressure here in the corn market. Okay, this is a weekly December corn chart. Again, I got retracement levels here. This was the low that we put in last August, right here, around that 358 area. You can see the January high or the February high we had. A market sometimes will retrace 62%. That lies right around 375.5. And December corn should find some solid support around 375. Hopefully we can get up and go and have a decent close tomorrow where we don't take much more off of this. But I'm just kind of showing you chart-wise where we could find some support. That's the corn chart. Next chart is the July wheat. If you can notice, July wheat is still holding its trend lines. We did go below some moving averages that I track, a little bit negative there, but as long as we can hold above this trend line, I am still friendly new crop Kansas City wheat. This is the Kansas City July wheat chart. And I'm kind of friendly that yet. There's some things going on with this year's crop that could impact carryover for a year from now. And I think the trade senses that, and that's why the rally or the trend line is still pointing up. If you remember, we've got the lowest winter wheat acres planted in 108 years. The crop condition in the Southwest is not near as good as it was a year ago at this time. We're probably 20 percentage points below the good to excellent numbers. So there is some things fundamentally starting to show up with this year's production in wheat. I know it's early. I know that wheat has 9 lives, but the wheat has come out of dormancy in places. It's 2 weeks ahead in that. If we have a cold spell that comes through and freezes hard down there, there could be some more frost kills or freeze damage done. And the trade senses that, and that's why we haven't quite broke down the wheat markets. So I'm kind of friendly the new crop wheat. So and I think that is it for the slides. And I'm going to go back here. And right now, I just kind of want to finish up. I think the webinar went pretty well for the first one, but we're going to continue to do different webinars throughout the year. I'm going to try to do one for every major crop report, and there'll be other ones on different things too. So stay tuned to Comstock. We appreciate you subscribing to us, and if you need any type of information on markets, don't be afraid to call the office and we can set you up. So thank you once again, and I'm signing off.